So I'm going to start off real quickly just explaining who we are, why we do, what we do, and how you can help us. So who we are is, first of all, we are committed to helping you simplify and understanding the right sizing process. We've changed it from downsizing to right sizing because right sizing might mean you're staying in the home you're in, or you might be actually, instead of downsizing, it might be a home that's similar to what you already have in size, but a single story or a yard that's smaller. So it's more right sizing. So Rick and I, we are your hosts and moderator of this series. We started it in January and we have lots of different topics. Rick was a chemical engineer, well, he is still a chemical engineer, but he joined me in real estate. I started in real estate in '86. He joined me in 2005. And we became certified downsizing coaches and specializing in seniors and what the needs are. As I aged, I started in '86, my clients aged with me. And I realized that as a seniors, we have different specific needs than people who are moving up. So both Rick and I took this on to learn more about how to help seniors. One of the things that you're going to learn, even though I'm a realtor that panels or reverse mortgages, our promise to you is not to sell you on using us. We really want this only to be about education, that you feel comfortable coming to any of the seminars we have and know you're not going to be sold. So why are we doing this? Because we are educators and because we really do want to help you in all aspects. It's not just downsizing. We have had seminars on scams. We've had seminars on Proposition 19. There's a lot of different topics. And if you think that there's a topic we're not hitting on, I'd love to hear what it is because we're going to start planning what we're doing in 2024. I've already got this room reserved for next year, so it's going to continue on. So what is this all about? Why are we doing these seminars? Because I have learned that we all know really well what we know, and we often know what we don't know, but we don't know what we don't know. And so that's what I'm really hoping today you might walk away with some ideas that you had no idea was even out there. So here's the thing on upcoming topics. In the brochure you have in front of you, there is a card in there that has listed what those topics are, and you may have picked up one of the topic cards outside. Feel free to take another, because how you can help us is give that to a friend. So help us grow and help people, other seniors, learn about this series. Also in that package is a feedback form. And we have been spending money and time trying to promote this. And right above the bold bar on that feedback form is how did you hear about us? So I'm interested in what's working, what's not working. So if you would take that and fill that out. Also, at the end, you can fill out the rest of it. And there's actually a place there, if you choose that you'd like to have a consultation with one or all of the reverse mortgage people, you can check that box. So right now, I'm going to invite Karen up. Karen is on our Senior Citizens Commission, and she has a bit of information about the center here and about NCDs.
Thank you, Christy. So Christy said you don't know what you don't know, right? So we're here to help you know. First of all, the lunch program is now called the Oak Crest Cafe. Did you know that? You do now. It's a great way to have lunch, get to know people. The other thing that I really want to encourage you to do, on the third Tuesday at 2 o'clock of every month is a Senior Citizen Commission. That's where you get to learn about what your city is doing for you as senior citizens. I get to play on that, and it's so much fun. But more important, we, like Christy, we need your input. How many of you filled out the survey that we passed out? Okay, good. That's okay. Good. And soon, hopefully next month, we'll have the results. So we can move forward one more time with those things that you want that are important. Just want to remind you that we do have sponsored some very good programs. Again, you don't know what you don't know for senior help. And summer's over. I have to turn in my white shoes. There's going to be a dance. August 8th from 2 to 4 here for $5. If you've ever been to one of these dances, it's a lot of fun. So again, now you know a lot more that you didn't know, and our panels are going to share a lot more that you didn't know, but that's going to be about reverse mortgages.
So Karen, on some of those pamphlets, do you have any of those that you can hand out at the end?
All right over there.
Okay, so as you're leaving, if any of that sounded like something you'd like to follow up on, grab one, okay? All right, so I'm going to turn the mic over to Rick, and he's going to take over. There you go, Rick.
I have my own mic. Good morning. So, like me, many of you have probably heard about reverse mortgages. You probably see the stuff on TV commercials, right? Let's see. Tom Selleck. Anybody else you can think of, Susan?
There's another guy.
Fred?
Oh, Fred from Fonzie, hey.
Yeah. Yeah, that'd be Henry Winkler. But anyhow, chances are that you've probably also seen newspaper articles about reverse mortgages. You've probably also seen print advertising about reverse mortgages and a lot more stuff. Some of you may even know somebody that's got a reverse mortgage. And there's a strong likelihood with all that information out there, you've gotten some bad information too. And that's pretty much what this is about. We want to take care of that information. Our goal today is to share with you the most current, accurate, and pertinent information about reverse mortgages. I am sorry that I'm stumbling here. Now, what you do with this information is entirely up to you. We are not here to sell you on getting a reverse mortgage. We're not here to convince you not to get a reverse mortgage. Our Truth series is about empowering you and educating you so you can make decisions for yourself. Today, we are interviewing 3 professionals. They are local lenders with a lot of experience at this, many years of experience. I will be asking them several questions that we get from people, seniors, who are looking to do some financing on their own house. So, following my questions, you will have an opportunity to ask questions of our guest panelists as well. You have a notepad in front of you, and as you come up with questions, please write them down, and we'll pick them up at the end, okay? So, are you ready to learn something? All right, then turn to your neighbor and say, you're going to learn something today.
You're going to learn something today.
And then turn back to them and say, it's about time. All right, I'm going to introduce our panelists. I'd like you guys just to come up here one at a time and grab a seat. Your microphones have switches on them, so make sure that we can hear your voice.
Good morning.
And I'm going to start.
Is that good? Can you hear? Good.
And I'm going to start in reverse with Julia. And could you just tell us a little bit about yourself, including the company you work for, and just some quick information about why you're promoting this product? Please go ahead.
Good morning. I'm Julia Kruger. I'm with CMG Home Loans. I started in the mortgage business back in 1987 and primarily focused on conventional loans, traditional loans. And as I've aged and my customers have aged, I felt the need to be able to offer additional services that included reverse mortgages. So now I can do both, and I feel that that will serve my customers a little bit better by being able to be advise them in any direction that suits their needs. So thank you.
Marta.
Hi, everybody. I'm Marta Hoyt. I've been living here in Encinitas for about 32 years. I started my career as a financial advisor. That was a long time ago, like 30 years ago. But I since then have switched to lending. Like Julia, I did forward loans first, and now I do reverse mortgages exclusively. What I like about the program is that it can be a lifesaver for many people, and education is very important. Again, that's what we're all here for. We may not know as much as we will learn by the time the seminar is offered. And if the program is not for you, it could be for someone else that is 62 years or over. Just a thought for you all. Thank you.
Tom.
Good morning. Good to see everybody. Just real quick background. I started here 62 years ago is when I arrived. Navy baby, born in Hawaii. Anyways, I'm a longtime Southern California native. Basically lived here. My dad was in the Navy and was on a submarine, so that's how I got started over there. But anyways, been here pretty much 62 years. The last 20 plus years in San Diego with my wife, and son just graduated from college, now living in New York. And my background on the reverse mortgage goes back about 20 years ago. I came from a little bit of a different background, but I had a friend that was in the mortgage business, and he recommended to me probably 23 or 24 years ago. He said, Tom, if you're thinking about making a career change and wanting to get into the industry, he highly recommended reverse mortgage because he could see from his vantage point it was going to be something that was really going to help people that were retiring, and it needed like specialty mortgage people to do it. So when I got started, I actually sought it out as a career and started with Wells Fargo almost 20 years ago. Wells Fargo was one of the bigger banks that provided reverse mortgages originally, and just fell in love with it. I've enjoyed all the relationships I've built over the years, helping people, give them a little bit more financial peace of mind, and being able to work here in the San Diego area is just a dream. So I live in Oceanside, but I've been going up and down the 5 freeway and even out east to Rancho Bernardo and Temecula and all that. So it's been a wonderful experience, and I hope that today is helpful for you guys to get all your questions answered or just get an educational, detailed facts about the program, and hopefully we can help provide that for you. And just very glad to be here. Thanks.
Great, thanks. All right, now we're going to get started. So I'm going to start by asking Tom the first question. What exactly is a reverse mortgage? And you've got less than an hour. So please simplify for all of us.
Okay, when I sit down with people, and I'll say the same thing to you guys, the reverse mortgage is a lot less complicated than it is complicated. It's really not that complicated to explain. It's basically an equity loan. It's primarily a loan that allows people that are 62 and over to access a portion of the value of their house. It's basically built on a formula where whenever you're getting information, you want to find out the facts or the figures. What we're going to all input initially is 3 things. It's going to be the value of your house. It's going to be your age, or if you're married, the age of the youngest. And then the third component is an interest rate. So we have that, and that's just whatever the current interest rates are. And so if you ever say, hey, how much can I get from a reverse mortgage, or how does it work? It's always going to start there. It's going to start with those details, the value of your house, your age, and then we use an interest rate. And then, as I said, it's just an equity loan based on your age. It's going to show how much would be available from the value of your house, and that's the starting point. If you've ever taken out a home equity line of credit, as an example, you can go to the bank. They can give you a $50,000 or $100,000 line of credit based on your qualifications. The reverse mortgage is similar, only it's really based on your age, so there's much more equity typically available. But to explain, Rick had asked me to explain kind of a little bit of the background. The most important thing to know about the primary reverse mortgage that we all do is that it's an FHA insured loan. Okay, so you might want to write that down. FHA insures all of the elements and details of the reverse mortgage. So whenever you're talking to somebody and you're getting your details, just know that FHA is behind it in 95% of the cases. There's also other programs for higher value homes that are typically $2 million and over, and that's something else we can talk about later, but primarily it's something that started back in 1989 when the federal government, actually there was somebody in the Senate that wanted to make something available to people that were retired to have access to their equity to help supplement their cost of living expenses. And so way back in 1989, it was hardly even heard of, started to gain more popularity towards the end of the 90s, and around 2000 is when it really started to take off in terms of being advertised in the media and so forth. And I'm just going to say one more thing because I don't want to take too long. I know we want to kind of go through and answer a lot of questions, but one of the nice things about what FHA has done with the program is over the years they've continually increased the benefit of what borrowers can get. When it started in the late 80s, it took the home value limit could only go to $30,000, so you could just get a percentage of that. Today, their value limit is over $1 million in terms of where we start with our calculation. So it really does give a lot of people, especially in our area, an opportunity to get relief based on how FHA has continually increased the benefit of the program. So hopefully that helps explain the elements of it.
Julia, you're up next.
Okay.
I'm going to ask you, so everybody else knows this, what exactly is a reverse mortgage and how is it most often used? So I'm talking home equity versus an existing loan. If you could just help them a little
Sure.
bit with that.
So a reverse mortgage, a traditional mortgage would be you start with a loan balance, you make payments, and over time that loan balance goes down. That, in a stable market, your equity increases. A reverse mortgage is the opposite. You start with, whether it's even a zero balance and you add to it, but it actually increases over time because you're not making a payment. So it eliminates a payment feature. Now you can make a payment, but the goal is to free up cash flow. And so that line of credit or loan balance can increase over time using your equity to supplement your lifestyle. And so many people have so much equity in the homes, and especially around here when our home values are so high, we have a tremendous amount of equity in our home that's not really working for seniors. And I know a lot of people are trying to live on a small pension or Social Security, and they're cash poor but house rich. This program allows you to utilize the equity in your home to eliminate payments, create a payment. It can actually pay you each month. You can take out a lump sum. You can draw against it as you need it. So maybe that is to just increase your lifestyle with travel or a new car or some home improvements, whatever you might want to do. Or it's to plan for home health care as you age and move through life. So it really can provide a lot of different things by utilizing your equity and tapping into the equity in your home rather than a savings account, a bank account, or other resources, financial resources.
Good job. All right, Marta, I saved the fun one for you.
Yeah.
This is a new thing that it seems like a new thing to most people, but I think it's really, really important. And that's buying a home with a reverse mortgage.
Absolutely, I get the exciting part. As Tom mentioned, reverse mortgages came out in, that was 2009. Most people don't know that you can also buy a house with a reverse mortgage. That bill went into effect in 2009. So it's been a while now. It's been 14 years. And what it allows us to do is come in with a down payment to have the lender cover the balance. Let me give you an example. If you're buying a house for $500,000 in today's market, you might be thinking of having to pay cash because there's a limited amount of homes out there, and people are paying a lot of cash for it, which most of us may not have. A reverse mortgage lets you come in with 50 to 60% of the value of the house. So rather than having to put 100% down on your house that you wish to buy. You can put down 50 to 60% and keep the rest of the money in your own bank account for emergencies. A lot of folks are buying houses at high prices right now because they want to live in San Diego. But if you put all your money down into a house that you can't really afford, how can you really decorate it? How can you enjoy living there if you have no cash left? So for people over 62 that are perhaps downsizing, as my partners have said, or just wanting a change, a reverse repurchase has been very popular lately with individuals, with realtors such as Rick and Christy, and even financial advisors as a way to keep us from liquidating our assets in a down market.
All right, thank you. Good job. All right, now I'm going to ask you to give me a novel example on how a client of yours used a reverse mortgage. And Julia, I'm going to start with you.
Thank you. So the first one that comes to mind is a recent customer within the last year, and they were looking to they were believing that they had to downsize. They loved their home, they loved their neighborhood, but they financially just felt strapped. And they had over $1 million in equity in their home. They still had a mortgage payment that was about $1,700 a month. And it still had a few years to go. And they thought the only way to free up that additional cash would be to sell and downsize. And as we dug deeper, it actually worked out to put a reverse mortgage in place. It paid off the balance of their existing mortgage. It eliminated the $1,700 a month mortgage payment. And we created an additional cash flow each month. So their net cash flow each month increased by over $2,000, and they were able to stay in their home that they loved and wanted to be in. And that, in using their equity, it created a whole different financial picture for them to be able to stay in the home that they loved.
Good. Tom, you're up. Tell me a great story.
Actually, I'm going to do two really quick. I want to do one because we just started to talk about the purchase reverse mortgage, which is not as commonly known or understood, but it's a very, very beneficial program. And I'm going to tell you really quick about a couple, Judy and Neil. They lived in a house in Temecula that was probably worth somewhere close to $800,000. They wanted to do a regular reverse mortgage, but based on their age, they owed too much to get enough out to pay off the entire mortgage that they had on the Temecula house. So what went along with that, just like what Julia is saying, is the biggest burden for people when they're retired is having that mortgage payment. That's typically the largest expense that we all have. And unfortunately for Judy and Neil, they'd had a little bit of savings they got from inheritance that was running out, and they had $3,400 monthly mortgage payment on the Temecula house. And so what we realized, first of all, the house was way too big. But what we realized is that they needed to get out from underneath the payment. And they still had some equity from selling the Temecula house. And so basically what they did is we got them together with an agent that sold the Temecula house. They moved into a basically brand new, totally remodeled house in the Sun City, Menifee area. The bottom line is with the reverse mortgage, they bought the smaller retirement home, got rid of their mortgage that they had on the Temecula house, and they actually ended up with $30,000 in cash from the sale of the Temecula house. So to try to express the relief, especially for Judy, she was younger and Neil was a lot older, she was taking care of him, but to express the relief that she got out of being able to get out of the big house, the mortgage payment, and then use the purchase to go into the smaller, more right-sized house was tremendous. So anyways, that's the wonderful thing we all get to experience with this, is it's really a life changer. I just turned 62. I know as I'm heading down towards the next level of wanting to get into retirement that I'm thinking about these things now myself. So that's number one. Number two is a story about Johanna. Her name is Johanna, and her husband, Burge. They lived in Rancho Bernardo, had a house that was probably worth close to $1.5 million now. And the problem was Burge needed to get care. He needed to get assisted care. And so what they did is they put him into a facility out there in the Rancho Bernardo area. They didn't have the money to pay for it, but with the reverse mortgage, they were able to take $30,000 out from the equity that they needed for home improvements. She paid off a small loan, and then we set up a $5,000 a month payment that went to her to pay for her husband's care that we scheduled for 7 years. So this just happened last year. So now they've got Burge in a retirement home. She's got the money to pay for his full-time assisted care, and she gets to stay in the house. The alternative would have been to pay for his care, would have been to sell the house. But she didn't want to move, her kids didn't want her to move. And so that was another story where it just made such a difference in this lady's life to take the burden of having to pay for her husband off her shoulders, be able to stay in the house, and she still had a little bit of line of credit left if any other kind of emergency came up. So, by the way, I just want to say something, and we'll all agree on this. Whenever you're looking into doing this, a lot of times your kids may want information or your advisors. With this couple, I worked with the son and daughter all throughout the whole process. So it's very much suggested that you get all the support and help from family members. Won't want to deal with all the math. We can provide that information, but bring in the people that are closest to you to also have a look at it. And in this case, the whole family was on board with it, and it made such a difference for this lady.
Great, great. Marta?
Amen to that. I have two stories as well. One of them is Marilyn. Marilyn lives in Escondido near the Wild Animal Park. She's 92 years old. I have been working with Marilyn for 3 years. She was recommended by her financial advisor. And Marilyn did not want a reverse mortgage. She wasn't sure why, but she owes $60,000, or owed, I should say, on a $950,000 house. Not only that, Marilyn was trying to do all the gardening, fix the fence, take care of 3 dogs. The refrigerator broke. The air conditioner broke a couple of months ago when it was really hot. And finally, after almost 3 years, Marilyn is ready for a reverse loan. She can't be any happier than that. She's just thrilled. She's getting all these little things done. She's got extra cash. Again, she's elderly, but we're going to have wine on Sunday because it's my birthday, and she is just thrilled. Now, the issue is, all of these years that we've been waiting, her children have been telling her they're going to give her money. We're going to send Mom 50, and Tommy's going to send her 200, and Mary's going to send her 300, and Mom's going to be okay. Guess what? They didn't keep it up. They have their own lives, their own children, their own health issues, and they did not do it. And Marilyn is asking for more money, trying to live on one measly Social Security check. Well, no more. No more. The financial advisor's happy. The rest of her life is going to be a better quality of life. Excuse me. My other one is to let you know that the reverse program is no longer for the destitute. We've all done many loans for people that have assets. One of my recent one is in Cardiff, a house with a 360 of the ocean near the Realization Center. It's valued at $2.5 million, and the couple there had a huge down payment. A huge monthly payment and lots of equity in the house. They were just tired of paying bills. They were just tired of that and having to sit down. They like to travel. They didn't want to do that. We got them a reverse loan. We paid off their high interest existing loan, and now they do not have to worry about monthly mortgage payments. But let us emphasize that if you ever do want to make a payment, you can. You wake up one morning, it's New Year's Day, and you say, I want to lower my bill, my loan. You can pay anytime you want, but you are never asked to make a payment until you move out of the house or when the last surviving spouse passes away.
Great story. A few times I've been up here to mention about kids. It doesn't work out a lot of times because kids have a life too. They have expenses too. Their time is short too. And even though their heart is in the right place, they want to help mom and dad, They don't know how. And they usually will guess. And like I said, it doesn't work out well. So that's a big reason that we're doing this education seminar, is so you guys can figure this all out before that time comes. And you just hand them the notes. This is what I want. All right. Now we're going to get to the fun part, where everybody gets paid. So if you could tell me, what are the fees associated with a reverse mortgage? The two most important ones are probably taxes and insurance. And I'll just go to Julia first.
Thank you, Rick. There are fees associated with a reverse mortgage, and that will be the traditional closing costs of escrow, title, appraisal, lender fees. Those are one-time fees associated with that. There is a loan origination fee, and on the FHA loans, there is mortgage insurance. There's an upfront mortgage insurance premium, and that is generally financed into the new loan. And the property taxes and insurance are still required to be paid by the homeowner. There is a possibility that you can include that, or will be required to include that, into the new reverse mortgage, and then the lender is responsible for paying that. But ultimately, the homeowner is still responsible for taxes, insurance, HOA fees.
Tom, can you add anything to that?
No, that's very well said by
Okay.
Julia. I would just say one thing, that just to add on to what she was saying. You'll sometimes hear reverse mortgages are expensive. You've probably heard of that. And the biggest expense in terms of, it's a finance cost. You don't have to pay it out of pocket. It actually is just part of the initial setup of the loan, is the FHA insurance that Julia mentioned. And I just want to touch on that really quick, because it is an expense, and it is the biggest one that you'll see if you're ever looking at a cost breakdown. The reason for the FHA insurance is it's a protection for the lifetime of the loan. In a reverse mortgage, there's a lot of money available. It could be hundreds of thousands of dollars. And so sometimes if people take out everything that's available to them, and God bless them, they live in the house 20, 25 years, the loan balance will grow with interest. So the purpose of the insurance is, even as the loan balance is growing, if there's ever a situation where, like we had in 2008, 9, and 10, when the market crashed and home values dropped, if there was ever a situation in the future where the loan ever increased past the value of the house, the insurance is there to protect the borrowers, to say you can live in the house for your lifetime, even if that were to happen. Even if it ever happened where the loan went past the value of the house, the insurance is in place to protect the homeowner, that they still would never have to move. So that's the reason why they have to charge the insurance, is that was what gives it lifetime protection. So when you look at it and think it's a big fee, it's actually very insignificant for the long-term protection it provides for you, as far as being able to stay in the house for life. So
Fantastic. Marty, you got something?
What Tom is referring to is called a non-recourse loan. And if you all are interested, you definitely want to speak with us more about that, because it's the only loan, the only investment that has that feature. And we'll elaborate more on that later. As far as the fees, out-of-pocket fees are only usually the appraisal, about $300 to $800, and a $125 fee for a reverse mortgage counseling class that is mandatory by the government, by FHA. So in a traditional loan, remember how we used to bring in money to closing, the origination fee, the title, the escrow, what did that total up to, $5,000 or $6,000, maybe more? Our fees are all financed in the loan, and the amount that you qualify for is net of those fees. So over the long term, the mortgage insurance, which is the highest fee, scares people, but we're not recommending this loan for the short term. This is a lifetime home loan. This is for your home if you want to live there forever. On the other hand, it's revocable. So please remember that as well. If you do a reverse mortgage today or buy a house with a reverse mortgage, if at any time you want to sell that house or move, there is no prepayment fee or anything to stop you from doing that.
Fantastic. Oh, we'll get the questions at the end. We'll just finish. Just write that down. Okay. Now, you brought up counseling process. A counseling process is required. Julia, will you help us on that? How does it work and why is it there?
Yes, the counseling process is for your protection to educate you further from an independent source on how the reverse mortgage works, how it can help you, and if it's a benefit to you. And when you start to inquire into the process, if you want to move forward, we do require that you go and get that counseling certification prior to beginning the loan process. And we can provide a list of companies that provide that. We don't recommend anyone specific, and it's $125, generally done in person, and anyone related to the loan, any borrower or spouse, is required to attend and take that education class.
Great. Tom, can you add anything to that?
The counseling is a part, reverse mortgage counseling is a part of the loan, it's a part of the process. The purpose for the counseling is, ever since this has been in place, HUD, Housing and Urban Development, oversees FHA. They wanted to have this protective layer for borrowers, that they understood all of the requirements, all the rules, everything that is important to know about reverse mortgage. So they set it up that it was required for a counseling service to explain what we would explain to you as well, but to explain it to you separate from the lender. So, for instance, there's certain things that are just very important to know that the counseling would go over with you, which is it has to be your primary residence. You couldn't do a reverse mortgage and then rent the house or move. As we've mentioned a few times up here, you have to continue to pay your property taxes and homeowners insurance. They discuss the different loan programs that are available, the fact that you can live there for your entire lifetime. So the counseling is a very important part before you even start the reverse mortgage, that you've had all your questions answered. And so I think it's a very valuable part of the process, because then you've really got the ability to get everything answered up front before you would come back to us and start the process. So it is very helpful to go through the counseling.
Great. Marta, you had something?
By the time you go to counseling, you will have spoken to one of us, and we will have told you about just about everything that you need to know. But the agency it's not a test. It's just a mandatory government thing to protect mostly seniors that are living alone and just don't get it. So we want them to know that the house has to be owner occupied, that they have to maintain insurance on it, and we want to protect them against perhaps siblings or children that are just not being completely honest with the senior. It's called a class, but it's just a telephone conversation. It takes about half an hour, and many times we have a grant that's free so that the borrower does not have to pay for that.
Fantastic. Now we come to the fun part. What are some of the most common myths or misunderstandings people have about reverse mortgages? Julia.
Yeah, the first one that comes to mind, and I get asked the most, is what happens to my house when I die? And there is the perception that regardless of any equity left in the home, the lender gets all of it. And that is not true. So when you no longer occupy the home, whether you have moved on to a care facility or you've passed away, and it's really when the youngest borrower or last borrower leaves the house, the lender will be notified. You would notify the lender, or your heirs would notify the lender, and within 30 days you will express your intent on what you want to do with that home. And just as an example, let's say the home is worth $1 million and the balance on the loan is $700,000. There's $300,000 in equity. your heirs have the ability to refinance and pay off the mortgage and keep the home. They can sell the home and keep their $300,000 in equity. We can go into more details on how that works. Or let's say they owe $700 and it's only worth $5. They can literally just deed the home back to the lender. But they're given the choice, and you do still have access to will your equity and your home to anyone that you wish. And that's probably the biggest myth is people say, I can't do a reverse mortgage. If I die in 5 years and there's all this equity left, my kids won't get any of that. And that's just simply doesn't happen. So that would be the first one I can think of.
Great. Tom, you got one? Or two?
Yeah, no, there's a few different myths. Number one, the biggest myth is that you don't maintain title, that somehow you're getting the money in exchange the house, the bank gets the house. Okay, Julia touched on that. The second thing, which Julia also touched on, which is a big one, it's worth repeating, is that the kids can't inherit the house, and that's also a myth. There's other myths about the reverse mortgage that have to do with how the making payments or not making payments. As we've mentioned here a few times, if you want to make payments, you can make payments on the reverse mortgage. So in other words, if you're doing it there's temporary cycles where you want to take money out or the loan's in place and it's growing, and then there's other times where you want to make payments, you can. So there is the flexibility with the loan to make payments if you want to. So sometimes it's a myth that you're not allowed to make payments. But the primary ones have to do with that you maintain ownership and whether or not the kids can inherit the house. Those are two of the biggest concerns I've come across.
Marty, got one?
Again, people think mistakenly that the bank owns your house. Just like your loan at Wells Fargo or Chase, that's in your name, and they have a lien on your property. The reverse mortgage would do that as well. But we don't own your house. If you have a trust, we can fund your loan directly into the trust, and if you pass away, we'll refer back to that. We don't want your house. We just want the interest, and we're willing to wait till you pass away or move away for that. There are lots of myths. One of the ones that I think is the worst, actually, is a lot of bad press. All of us were talking outside about how people come up to us and ask us pretty silly questions because they've been talking to a friend of a friend of a friend who just really doesn't know. So FHA back in around 2017 revamped the whole program to protect us, to make us lenders, all of us here, guide to certain rules and guidelines. The rates that we charge, the fees that we charge are all very monitored. Again, that's part of the reverse counseling process. It's also part of why the loan does take 4 to 5 weeks to fund. So the myth there is that it is the bad press is the bad myth.
Yeah, a lot of that out there. Okay. Naturally, I would think that using a local reverse mortgage lender would make sense. But should people want to shop around, what would you recommend they be looking for in choosing a lender? Julia?
Biggest thing I recommend is finding somebody that you are comfortable working with. And I just had this happen recently on a conventional loan. It was a straightforward loan. And initially the borrowers shopped for rate, and our rate was competitive, but it wasn't the absolute lowest. And they ended up coming back to me because I took the time to explain things to them and walk them through the process. And I think as we have become such an internet-driven society, we've lost that personal touch and that human touch for service. So I would encourage you to look for somebody, to shop for somebody that you connect with and that you trust and that you feel has your best interest at heart. And even if that best interest is saying a reverse mortgage is not the best way to go for you, You want somebody that can be transparent and honest with you and not just out for a single transaction, that actually wants a relationship to help you and guide you, to work with your family members, to do what's best for you. And that may be one of us, it may be somebody else, but find somebody that you connect with and trust, that will pick up the phone when you call and will take the time to explain things 2 and 3 and 4 times, because sometimes it takes all of us that to understand something.
Tom, anyone you can recommend?
No, that's really good. I think what's really important is whenever you're talking to anybody that you're getting information from on a reverse mortgage, the most important thing that you want to feel comfortable with is, are they asking you questions and relating with you personally on your whatever your circumstances. We probably all go through the same process where the thing about the reverse mortgage is it's 100% not a one-size-fits-all type of program. There are so many different ways to have it set up that it's important that when you're talking to somebody, you feel like they're engaging with you to ask you about your personal financial situation before they start discussing the program and details and figures and anything like that. Because, like I said, some people don't need to take a lot of money out. Some people just want to have this set up so they've got a safety net for the future that expenses may come down the road. Some people only need a little bit additional income because their Social Security is maybe not quite making it enough to make their budget. So the idea there is whoever you're talking to, make sure that you feel very comfortable that they're engaging with you, just like if you went to the doctor and they're doing their analysis, or if you went to your financial advisor and they're going through their whole process. Make sure before they start getting into throwing out facts and numbers and those type of things that they're asking you questions about what your financial picture is like, because that's a very important part to have it set up correctly. And that's all I'll say about that. And a lot of times you can get referrals from your financial advisor, from other people that you know that you trust, like accountants sometimes are a good referral source. You know, people that in family or anybody that maybe you know that's already done a reverse mortgage, if they had a good experience with their lender, you can do that. But just make sure that the questions are being asked up front that help you to feel like, okay, they're doing this in my best interest in terms of how it's being set up.
Great. Marta.
Well, I would like to recommend a local lender. We live in a great society. We have excellent people here. Why not a local lender that can visit you at your home, address your issues, and meet with you more than once if necessary? There are a lot of call centers out there. Most of them I would not recommend. It's good for information, but if you want a reverse mortgage specialist that's going to stay with you for a while or maybe help your elderly parent out, why not a local lender? That you can relate to, can visit with you at your home, knows the area, knows real estate agents that can help you out if needed, if you need to sell a house, etc.
Fantastic. Okay, guys, is there anything I haven't asked that you feel is important for anyone here to know, or did I get them all? Okay, maybe we'll go to the questions. Chris, you were first.
Well, I was most interested to
get information about exactly how much the FHA mortgage insurance would be. If you could maybe give an example, say of $500,000, a loan of $500,000, what approximately?
Sure, I'll take that. It's a very simple, straight answer. What FHA takes in terms of what's called their upfront mortgage insurance is 2% of the appraised value of the house. Okay, that's what's financed into the cost. So to answer your question, if your home appraised for $500,000, the mortgage insurance would be $10,000, which would be part of the initial cost when the loan's being put together. Okay?
Answer your question? Great. Harriet's going to run right to
All
you.
of you guys have done great. I have a question. This sounds really good, but is this based on the current interest rate? And do you lock in a rate when you do a reverse mortgage?
Yes, current interest rates are very important, so we are looking at those rates right now. We have different programs. Some of those rates are fixed, and some of them are variable based on T-bills. So we do, the amount that you qualify for is based on the value of your house, your age, and current interest rates. Now, depending on what you prefer, a fixed rate is now, is everybody sitting down? It's about 8%. But there is an adjustable rate that is a lot lower and can go down when rates get better. It also has a cap on it to protect us. Reminder, people that are looking at this program are not concerned about rates. We're concerned about getting rid of that pesky mortgage payment or getting some equity out of your home. These loans are very easy to qualify for. Most people qualify on Social Security alone.
However, that accrues on a daily basis.
It accrues, yes. It's a deferred interest loan. We do have amortization schedules that we are required to show you and are very happy to detail with you. You can see how much your loan is growing on a monthly basis when you get that statement.
And what percentage can we take against our house? Let's say our house is $1 million. Is there a cap there? Excuse me. Is there a cap there?
I'll let Tom follow up. Go ahead.
Yeah, so the way it works, that's a great question. Let's stay with $1 million, okay? This is a very simple way that this is done. The amount of money that's available to you, we said, is based on the home value of $1 million. It's based on what the current interest rates are, and the third component is your age, okay? And the way they run the calculation, it's based on like an actuarial schedule. So the older you are, the more money you get, because there's no payments required. So when they run the calculation, they're taking what the current interest rate is, what your age, and your life expectancy, and they're making available as much as they can that fits in that actuarial schedule formula. But to get more specific in terms of the amounts, right now, this is a rough estimate, but at age 62, you're getting 38% maybe of the value of the house. At 72, that's going up to 40%, 42, 43%. When you get to 82 and up to 90, you're getting 50%. In some cases, if I just did one for a guy in Del Mar, it's like 62%. He's 92 years old. So the money that's available, the thing that's very nice about this is there's no trick to it. We plug in those things, your value, the age, and the interest rate, in that actuarial schedule that's going to tell us how much is available. But it's a very generous amount as compared to conventional loans. So hopefully that answers the question.
Thank you.
Help me with this, because I get it a lot. So let's go back to the 62 again, right? And he's getting, what was the number you used, like 30% or something?
Say around 35, give or take 35.
Okay. And this guy outlives the actuarial table, right? And the house keeps going up in value, right? That person still is going to get that value. I mean, when he decides to sell it, people are sold. So it's not that he's losing that money. And the other thing that people keep missing is that you don't have to make any payments here, right? So the money it's always right there, right? But you don't have to worry about making that monthly payment now. You still have to pay your taxes, you still have to pay your insurance, but you're not paying any money like mortgage to live in the house. Make sense? Right. Sorry. Here.
So I only have a dozen questions. I mean, a couple of them are obvious. This is for people that want to stay in their house, is one thing, right? Okay. The second of all, what do you base the actuary on? The wife or the husband? If the wife is, say, 68 and the husband is 80, what do you base it on?
You base it on the youngest.
On
It's
the
based
youngest.
on the youngest.
Okay. And then I logically assume that you have to maintain the property, obviously. But does the reverse mortgage always want to be in first position, and so they pay off the first and the second if you have that? They pay those off, and that's part of your reverse mortgage.
Correct.
Okay.
If there's any existing liens, those get paid first.
William,
Yes.
may I add, if you take equity out of your house through a reverse mortgage, it is tax-free. Okay, so if we pay off your current loan, we give you a new reverse, you take some cash out to go on a vacation or do whatever you want. We don't even ask.
So your monthly payments are tax-free also?
Right, your monthly payments are not tax-free. Those, you're not making your monthly payment, right?
Well, supposing
What you
you're getting
receive-
your monthly payment
pardon
made
me.
and you get, let's say, $2,000, I don't know.
Yes, any term payment that you decide on or any tenure payment based on your
You
age.
don't pay income tax?
Correct.
Wow.
It's
That's
borrowed,
pretty good.
it's basically borrowed money, so it's not income, even though it acts like income, it's borrowed money, so it's not taxable.
There's no such thing as free money, but I think Bill just got it, right? I mean, they're not giving this loan to people that are in their 30s, 40s, and 50s, right? I mean, the finance company has to make some money, or they wouldn't be giving it out, right? It's backed up by the U.S. government, and you're not making that monthly payment.
Hi there. I have a couple questions. I'll make them quick. With a reverse mortgage class, if you decide to do that, like my mother and I we're best friends, so we have a place together. And I wanted to ask about if we both took this class, then like we decided, yes, let's do it. Or if we say, well, we're a little bit wondering about it, let's wait and do it in like 3 years. Do we take the class again because there's new information with the law? Or also, how does that work?
The certificate, it's called a HECM certificate. It stands for Home Equity Conversion Mortgage.
Okay.
Is only good for 6 months.
Okay, good to know.
And then you'd have to take the class over again.
Okay.
Now, you could also be on the reverse with your mother if you're 62 and over.
I just turned 55, so
Oh,
that's not
lucky you.
Okay, now I can buy into that place I want to live. Okay, also, last one out. Now, I'm not a spouse, obviously, I'm her daughter. So does the law kind of right there because it's last one out? Because what if I get hit by a bus tomorrow? Unfortunately, that would be sad. But, and then she's last out because I got hit by a bus. Or what if she got hit by a bus? Sorry, Mom. But what if something like that happened? Last one out kind of thing.
So
If it's her or me.
And you're not 62, you would be on the loan, but
Yeah.
you're not 62. Well, she could be on the loan alone and you can be on title.
Oh,
But I would
okay.
strongly recommend a trust, a living trust.
Okay. And is it better for her to own the home or me to own the home, being the senior, being a little bit older than me? Not much.
Okay, well, first of all, you really want to get a lot of detailed information if you're under 62, okay? Because it's very important in most cases, that when you're doing the reverse mortgage, it's required in the FHA version that at least one spouse is 62, okay? There is a provision for married couples where, let's say, we've had it where obviously guys maybe 80 and he marries a gal that's younger in her 50s. Okay? That's happened. And so what can happen in that case is that we can do the reverse mortgage, but the money that's going to be available is based on the younger spouse's age. She's not on the loan, but it's set up in that particular case for married couples that if something happened to the older person, the husband, then the wife could stay living in the house. That was a very important component. I have to check into it as far as, if it's just a relationship for mother and daughter,
Okay.
if that would offer the same protection. But the money available, again, is always going to be based on the youngest in that case.
Okay, and say that, one more thing and then I'll give it up. I know there's others. Say we do the reverse mortgage and then somehow we win the lottery or something. Then can we buy out?
No prepayment penalty at any time.
Okay, thank you. Thank you for being here.
If someone passes away, doesn't the reverse mortgage lender require payment in full by the end of a month?
No, we're very nice. We don't want to throw anybody out of their house, so.
Well, no, the reason I'm asking is that happened to my father, and the lender in Arizona, we got a letter from them that said, the interest and everything needed to be paid off within a month, and it was like, you've got to be kidding. So I don't know if they work differently.
Yeah, I work in Arizona. I think all of us do. We need to get licensed in different states, but we're licensed throughout the United States. And the rule is the same because it's a government-sponsored program. You have a minimum of 4 months to let us know what you want to do with the house. Do you want to sell it? Or do the heirs want to sell it, I should say? Or do you want to keep the house? If you stay in touch with the lender and you let us know that you are working on refinancing the house in your name or buying it in your house, or that it is up for sale, you probably have at least up to a year, as long as you keep in contact with us. Now, the house will be accumulating interest on it. So if the loan balance was $200 when the person passed away, and you're not making mortgage payments for a whole year, it's going to be more than $200,000 when you finally pay it off.
Following what you came up with, can you give me an example? Now, I know that some people have gone through foreclosure. What caused that to happen on a reverse mortgage?
Okay, this is very important, all right? This is a very, very important topic, so I want to touch on what Marta's saying. There's, within the disclosures, and actually what it comes from is it's not in the initial loan disclosures, but with the reverse mortgages set up, then you start getting statements every month from your servicer. Like if you've ever had mortgage statements, from Bank of America, Wells Fargo, you get a statement every month, shows what your payment is, what you paid last month. On the reverse mortgage, you're also going to get a statement every month. It shows you what your loan balance is. In many cases, there's lines of credit that are a part of it, so you see that you have your line of credit balance and you get that every month. Okay? In the case of when somebody passes away, this is the absolute best practice to do. Okay? And I try to explain this to the kids or heirs. From servicing, the terms are that you have an initial 6 months to either sell the house or refinance it, okay? If it hasn't sold within 6 months, then they can offer 2 3-month extensions. So let's say you pass away in January, or mom does, or what have you. The most important step when that happens is within 30 days, you want to let servicing know what the intent is. So once that's happened, say, okay, mom's passed, then it's built in that there's going to be a time frame to repay the loan. They're never in a hurry to try to foreclosure, and that's another myth. That doesn't happen like that immediately for FHA. So again, you let them know within 30 days, okay? Or the kids do. You have 6 months. They can list the house or refinance it to repay the loan. If it hasn't sold, let's say by June, they want to stay in contact with servicing, and then they'll ask for, and they'll typically they'll give them a 3-month extension. And then again, if it hasn't sold in September, another 3-month extension. So the terms are would need to be repaid within a year. Okay, but it just doesn't say 1 year. It's 6 months and then 2 3-month extensions. Okay. The main thing is if you do this, you let the kids know, hey, here's where my paperwork is, here's the statement. You call. They're used to this because this is all part of the program, is that there is this repayment period. But I want to go back to one other thing that Rick was saying with regards to foreclosures. There have been examples, like I said, I've been doing this since 2004. And so I watched that whole fiasco in 2008, 9, and 10, and 11 when everything shot through the roof, and then it came down just as fast. If you remember around 2011, 12, 13, the market was just diving. So we had situations in that period where the reverse mortgages people were getting in 8, 9, and 10 were very high value home. The home value was very high. When it crashed, now all of a sudden the loan was higher than the value of the house. So the kids can just leave it alone, not do anything, and then all of a sudden you do have a foreclosure issue because at some point the lender has to be repaid. The very best thing to ever happen if they're in that situation is to get a hold of a realtor and have the house listed and sold, even if the loan is more than what the current market value of the house is, because that's what the FHA insurance is for. So for instance, if there's a $700,000 loan, and then we come along and we tell Christy and Rick, hey, we need to get this house sold. I've done this before where I had a son that was in Ohio for a mom that was in Oceanside. He said, I got to sell the house, but I'm not out there. So this was years ago. I contacted an agent that I worked with and said, okay, get the house listed. You let the bank know, and they'll let them go ahead and sell it for whatever the market value is. They'll pay the brokers, the real estate professionals, and then the insurance pays the difference. Okay? So there isn't typically a messy situation like a foreclosure where there's money that's left owing or that the kids are going to owe something. What Marta said earlier is it's called a non-recourse loan. So if it ever gets to that situation, non-recourse means they can't go past the primary parties for collecting payment. But you said that was your dad?
Yeah, we didn't sell the house. It was just getting that notice in the middle of all the stuff going on. You're like, it kind of felt like you had to do it right away. I don't think we did because we got his realtor, who's a good friend of his, and she sold it.
Right.
But,
did you then collect at the end of the sale, I'm just to jump into, did whatever was left over after the sale of the house, did it go to?
We had a business that we collected on, but we didn't collect on the house because it was difficult, I think, for us because it was in Arizona and we just wanted it over, the whole situation. But I don't know if we knew enough about the reverse mortgage, I guess, to handle it correctly. And my sister's up in LA with her husband, and I think they handled that part with the realtor. But at the time, I remember thinking, gee, this is really confusing. I wish we would have known more and been involved in it more. And I don't even know if my dad understood the whole thing when he took it out. It worked well for him, but then he fell and broke his hip and we brought him here for care.
It may have, there has been a lot of changes and revamping over the last couple of decades and even the last 5 to 10 years. So it may have been different terms when he actually took out that reverse and how it was applied at that time. If he'd gotten it 25 years ago, there may have been different things in place, or the loan may have exceeded the value of the house and it just didn't connect, and that's why there was nothing left over. But that's a lot of that has changed now to protect the homeowner and the heirs.
Rick, can I tell a real brief story about reverse mortgage? So we had a client that was referred to us, and it was a reverse mortgage. Mom had paid off a loan, did some improvements on the house. They had the kitchen remodeled, and then she was getting sick, and the daughter and the son-in-law moved in, and she ended up passing and needed the home sold, so we were brought in. So there were a couple, when we talk about how you hear stories of how bad reverse mortgages are, this, on top of the reverse mortgage, it was a probate. We did not meet her before and advise of getting in a trust. So we had to get a probate attorney involved. We had to work with the reverse mortgage company and let them know. They had to show it was listed, but we couldn't market it. We couldn't do anything because we had to get the probate thing. So this took almost a year. And the son-in-law and daughter are living in the house all this time, not paying anything. They're living there, enjoying it, and guess what? COVID hit. And the reverse mortgage company let them stay there. So here's the thing that was wonderful for them, because we live in such an area where the values have been going up. When we originally started working with them, they were only going to get $80,000 at the end. By the time all this happened, they ended up getting like $300,000 because the values went up and they lived there rent-free for a couple of years. So reverse mortgages are not always, the bad guys like sometimes you've heard. So I just wanted to share that.
Thank you.
There's one back here first, Bill.
You mentioned equity loan at the very beginning. That's kind of like an equity loan on your house. What is the advantage? Why not just do an equity loan, especially since the rates tend to be lower?
It's hard to get a home equity line of credit right now, a HELOC at a bank. Most of them are not even offering it. Some credit unions are. You have to qualify for it. You have to show them all your income docs, etc. And it's also based on how much equity you have on your house, and you have to make payments with the HELOC. Also, HELOCs are oftentimes revocable. I know mine was canceled at a certain bank. I came home from work and my $150,000 line of credit was shut down. All right, our HECMs, as we call them, our HECMs line of credit are non-cancelable for life. And you have no mortgage payments and very little qualifying. Is that what you want to
that
hear?
makes sense. Okay. And then another thing, I'm also an agent. I'm just curious, maybe you guys know. When you look on the CRS tax record on a property and you see the mortgages that are held on it, does it say, is there something that indicates that it's a reverse mortgage?
Yes.
Yeah, one thing you're an agent?
Yeah, I'm
Okay.
just curious how you identify that the mortgage.
Yeah, here, I want to answer that, and I want to come back to the line of credit if I can really quick, because there's a very important thing that I'll address, okay? But when you do the reverse, and this is for the agent that I want to answer the question. I don't want to try to get too technical, but when you do the reverse mortgage, there's two deeds of trust that are recorded, okay? One is to the lender, and then the other one is for HUD, because HUD is behind the lender. So literally the security in this is if ever a bank defaulted for whatever reason and you're collecting payments, then HUD steps in. They will actually service the loan and continue to keep all the terms in place. So you'll see two deeds of trust. And the other thing that's a little bit of, this is just I don't want to get too crazy with this, but when they record the deeds of trust, because there's no payments being made, they don't know what the future loan balance is, they'll record it at 1.5 times of whatever the initial appraised value is. Okay? That's just for the recording, because it's unlike a regular loan you're paying down, they can put what the loan amount is. But I don't want to say any more than that, but hopefully that answers your question. Okay?
Yeah, so the amount shown on as the balance of, or the mortgage amount that was taken out is 1.5 times more
Of the appraised value, not even the...
which is typically the sales price, let's say. I mean,
Yeah, and that's just
that's
because that's in essence what's being insured for the life of the loan. But whenever you go to payoffs and dealing with title companies, you get a mortgage statement and it's just whatever's owed. But can I take a second on the line of credit? And I'm going to share a story. But this is very, very, very important to know. Okay. The whole idea of the reverse mortgage is to add more liquidity to your retirement. So you have whatever you have in your cash assets, your investments, whatever fixed income you're getting. So you have whatever those numbers are. But there's a tremendous amount in the asset of your home, which is in the equity. A lot of times people set this up to get the line of credit, because that takes care of supplementing the income. That takes care of the big expenses that come along, like home repairs or car replacement or medical issues that can happen. You can draw from the line of credit and you don't have the burden of making a payment. So unlike a conventional loan, you can set that up. It's a temporary relief maybe to pay off credit cards or get people, replace a car. I met with a lady yesterday that wanted to get information for her friend, because her friend's really in a bad situation right now, where she's got a house down in San Diego. It's probably worth $850,000. She only gets $2,800 a month. That's all she gets. And it's not enough to cover all of her base housing expenses, even without a mortgage. She's got to replace a car that's literally deteriorating and falling apart, and she's been taking out credit card loans. So now she's up to almost $40,000. okay? She will have a difficult time going and getting a regular line of credit because her income doesn't qualify. But then number two, she's going to have to make a payment, and line of credits right now are hard to get, and they're 7.5%. Okay, so she's just going to be chasing her tail. At her age, on the reverse mortgage, she could get over $350,000 available, and what we'll do is pay off the credit card, get her a new car, so she'll take out probably about $50,000 or $60,000 from the line of credit. She'll still have another close to $300,000 left for reserve, but she doesn't have to make a payment. So for people that are on fixed income, it's always such a better long-term solution is to have the reverse mortgage line of credit than the regular line of credit, because you got the payments to make. And eventually that catches up and it just compounds the problem. So it's ideally suited, like Marta said earlier, if you're going to be in the house long-term, but it's just a way on your own private asset to access what you already own. Take some of the equity, but it really does fit in situations like the one I just explained for this lady yesterday. So,
And that's tax-free, right?
it is tax-free.
Yeah, that.
And the one
So
last
to
thing
speak.
I got to add to this too on the line of credit, because this was I was going to tell you, and you said if there's any other things to bring up. The one other thing that's really unique about the line of credit on the reverse mortgage is whatever that number starts out at, they give you a growth rate. Like, it's not interest per se, but it actually is going to increase every month and every year. So your available amount of funds is going to continually increase. If you don't take out everything that's available, you're going to watch your monthly line of credit availability go up, and that's on your statement every month.
If you elect to do a fixed loan, not adjustable, and the rates start to go back down,